Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, glad to be back.
John, Sun Metals reported initial results for the copper-gold Stardust project, which pleased the market, but the stock exchange was not happy. What was all that fuss about?
Well, the Stardust project we've talked about on this show quite a few times. First, when Lorain Copper was the only publicly traded company, they had effectively optioned 100% to a private group headed by Mark O'Day. And the deal was that they would get 30% of the public company when this public company spent $6 million to vest for 100%. And then Sun Metals finally made it public in May, and we've started talking about Sun Metals because that's headed by Mark O'Day, Don McInnes, and Steve Robertson is the CEO, who's actually taking care of all the business. They went to work after raising $6 million, but they had a late start this year. Winter lasted longer, and the geophysical surveys that they wanted to do as part of their sort of $5 million exploration program prevented them from starting drilling until early August. So they had a late start. They put a second rig onto the property at the end of August, and everything was looking pretty grim. The stock was down to 13, 14 cents in the summer when some of these private placements came free trading, and 5-cent shareholders bailed before the 25-cent shareholders could get their stock free trading and start bailing. But on October 25th, they put out a news release which reported some of the holes from the project, and the entire program of 15,000 meter, they ended up only doing about 7,500 meters, and before calling it quits as the winter started to arrive in this part of the world. And this will leave them with still about $3 million in the treasury. But the stock traded for about 45 minutes and was trending up when suddenly the alarm bells began ringing at the stock exchange, where IROC, which is the self-appointed pseudo-regulator which monitors news releases, realized that this uptrending stock was not a cannabis stock and they better investigate. And they looked at the news release and said, whoa, there are some technicalities in here that we must halt the stock. So the poor stock ended up being halted for the rest of the day. And what upset the stock exchange, besides the fact that a junior appears to have made an important new discovery within an old discovery, is that they had attempted to help the public understand the significance of the latest results by quoting rock values. And they probably shouldn't do that. That's the job of people like myself, whom people are paying for subscriptions, newsletter subscriptions, to go and do the math and say, this is $500 rock we have here instead of the $200 rock that the 3 million tons of resource that's already in place is all about. And the other thing that upset the stock exchange is that the news release did not mention anything about whether or not this was true width. So the intersection that really excited the market, it was 36.5 meters of nearly 4% copper, 4.5 gram gold, 84 gram silver, and 1% zinc. And that is substantially better and also a longer interval than ever obtained on this project, which was explored during the 80s and 90s, $10 million spent on the project in historical dollars, chasing this carbonate replacement style, skarn mineralization, high grade, the sort of stuff that you want these days, not low grade giant porphyry systems. And one of the people who's an expert on carbonate replacement systems, Peter McGaw, he's been an on-again, off-again consultant for this project, and he is part of the story right now, helping the Sun Metals people figure out what is going on. And he looked at this core, and there's a little video which they released on the day of the news release, showing him looking at this core and saying, wow, we're getting a lot closer to the source in the classical model, where you start seeing the higher grade copper and gold values. And but we're not there yet because we do not see replacement of the garnets in this skarn material. So in his view, especially the fact that this was the deepest hole drilled on this property, it went through a fault and intersected this very thick interval. To him, this was a game changer. And that's the big story with Sun Metals is they've drilled deeper than ever before, passed through some sort of complex fault, which was nature they don't understand, and even better, as they pushed the hole even deeper after some more barren-looking limestone, they intersect what appears to be another 20 meters of massive sulfide mineralization for which assays are still pending. Now, talking to management, this hole is probably the best that they will report this year, just based on inspection of the visuals that they can see in the core. The rigs did two things. They investigated the Copper Canyon skarn system, for which the resource already exists a little bit to the north and south. But the other rig also investigated a number of targets around what they call the Glover Porphyry Hub. And the idea was to find other spokes of CRD mineralization radiating away from this porphyry hub. So they've got targets to the northwest, to the southwest, to the southeast. Some of them are geophysical targets that arose from the survey they did this in early summer, and others are ones based on the mapping they did and are geological targets. And we have no idea what the rest of these will deliver, but they cannot go back into this property until maybe at the earliest April. So for now, the stock is waiting for the rest of the deeper part of this hole to see what's going on there. And of course, because they didn't drill any other holes through that fault to see what is going on, we do not yet know what the geometry of this is. But given the nature of the other mineralization, which dips to the southwest, it's hard to believe that the faulting would have completely flipped it around so that this hole represents a down dip type of hole, and that it is anything but true width. It is probably a significant development, and I'm watching this play closely. The stock exchange did allow the company to trade the next day after putting out a retraction, which everybody realized was a nitpicking joke. And this is the ironic thing. A cannabis stock can say anything it wants about the future, but because none of that is verifiable, it doesn't matter. But in the resource game, everything is based on physical reality, which at the end of the day can all be inspected and corroborated as to whether what was said earlier was correct or not. Whereas in the cannabis game, there is no truth. It is all just fantasy, and whatever didn't become reality, well, that was a possibility along with everything else in the past. So, major discovery within a discovery. It opens up next year, and investors can't wait to see what happens when they resume and start drilling a series of deep holes to see where this higher grade, larger carbonate replacement style zone trends.
We'll have more with John Kaiser right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Welcome back. We're speaking with John Kaiser. John, West Haven Ventures reported additional results for its Shovel Nose project this week, which has taken the stock to a new high. What do these results really mean?
West Haven reported the results for hole number 15, which is a 100-meter step out to the southeast of hole number 14, which they reported on October 17, and which in turn followed hole number 12 on October 2nd. And that October 2nd hole was the first indication that we had that something significant was happening in the Shovel Nose property, which is in the Spences Gold Belt. Historically, the Spences Gold Belt, it has been explored for many, many decades. Dwayne Poliquin's Almaden had it in that 2000 to 2005 period. Then in 2006, Strongbow took it on and explored a number of projects. They gave up in 2010 and sold the various projects to West Haven, and they've spent the last 4 years beavering away, coming up with results that, they're looking for high-grade gold, silver, low sulfidation epithermal mineralization. The results have largely been pitiful, low-grade, just sort of smoke, never quite getting into anything. The South Zone showed up late last year. It has been the focus of drilling this year, and on the October 2nd hole, it gave us a short interval of a very high-grade gold and silver. Then the next hole, which was about 260 meters to the southeast, it was number 14. All of a sudden, we had 18 meters of 25-gram gold and 108-gram silver. So this was a substantial widening of this vein system. And then hole number 15 drilled 100 meters to the southeast. That's 46 meters of 9 gram per ton gold and 65 gram per ton silver, and there's some higher intervals within that. Now, they don't really understand the geometry of this system yet, but it is the widening of the vein system and the high grades within it that is capturing the market's imagination. The footprint in terms of strike, 360 meters, is still relatively small, and you have to keep in mind that these epithermal systems have a vertical extent of sort of 300 to 500 meters before the mineralization fades out. So it's not like these orogenic mesothermal systems that can go down for thousands of meters and be high grade all the way, such as you see in the Abitibi Greenstone Belt. Now, what's interesting is that somewhere between October 2nd and October 17th, another junior called Sable Resources, which is Tom Obradovich is now in charge of, they went and map staked 190,000 hectares, covering 70% of this 200 by 30 kilometer Spences Bridge gold belt. And they did this courtesy of map staking, but it was the sheer sort of size of this staking and the underlying vision. Now, Tom Obradovich was with Keith Barron, part of Aurelian Resources, when they discovered the Fruta del Norte gold-silver epithermal system in Ecuador. That thing ended up being trading as high as $40 after starting at 60 cents. And they had drilled a target through basically a blind target, but inferring a pull-apart basin that they had sort of tracked over a fairly large region, but this was an area where they could actually get access, and they nailed it right on. And that was one of those things where, is this just a down dip hole? Does it mean nothing? And in fact, it turned out to be not just a down dip hole. Now, the Sable Group believes that the whole Spences Bridges is also a failed rift system. And in that context, where you're looking for giants, such as Fruta del Norte, which is now under development by London Gold, it has been woefully underexplored. So they have staked all this. They've done a knowledge-sharing deal with West Haven, where any land within 5 kilometers of the 5 projects that West Haven has in this belt, West Haven will get a 2.5% NSR, and if Sable wants to farm it out, West Haven will have a right of first refusal on those 5 kilometers. So what you are seeing here is a combination of very good high-grade results of the kind that pleases the market, and which is also what they have been seeking in this area, which shed all the gold into the Thompson and Fraser rivers that became the basis of a placer gold rush more than 100 years ago. The other nice thing about this play is that this is a year-round access type of a project. I mean, there's ATV trails all over the place. There's logging there. They can drill year-round. So in the Golden Triangle, where winter is coming in, there will be no results flowing except what was still pending from the summer season. Even Sun Metals in north central British Columbia, that is shut down now for the winter, and they won't be able to get back into there until April, May, even though the market would love to give them money now and go in there and drill additional holes. Here they will be able to drill year-round, so we will get a lot more information flow. They will resume drilling in November. So this is the play for the moment to watch in terms of continuous news flow. This system, even though they've only traced 360 meters so far, it is open in the southerly direction where there has not been any work. And so we'll see what happens when they start stepping out to see what happens to this vein system. Does it stay wide? Do the grades persist? How big of a system do we have here? But we also have another well-financed company, Sable, headed by a group with a great track record, looking at the entire region from a big picture perspective. And that's really good because it'll put the attention on southern British Columbia, have people a lot more interested in high-grade gold-silver systems there. And, of course, we have the usual poisonous little tag-along juniors picking up claims on the periphery and all that, trumpeting that they are now part of the Spence's Bridge regional gold play.
We'll have more with John Kaiser right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're chatting with John Kaiser. John, in September, you expressed surprise over how much Novo Resources was paying for property in the Egina region of the Pilbara. The stock has done poorly during the past few weeks after Novo updated the market on its Commonwealth sampling program and its plans for the Egina. What is the market unhappy about?
Well, the deal involved paying $8 million Australian in cash and stock to a private company called Farno McMahon, which had a land position in an area where Novo already did have staked land, and an area where juniors like the Gray Mining and Kairos have land position. The land includes the Fortescue formation where it sort of ends at the Pilbara basement, and where you see the conglomerates peeking out the side. And this whole area is known to have gold nuggets within the conglomerates. And it's part of the whole idea that the entire Pilbara was at one point, and probably where the Fortescue formation exists, has this called conglomerate horizon that's contemporaneous with the formation of the Witwatersrand gold reefs. And there could be billions of ounces sitting in these conglomerates. But the play has really, really lost momentum since all the excitement over a year ago when Novo first brought the story to the market's attention. The problem is that the efforts to solve the sampling problem have so far failed. In early October, Novo published results from the Comet Well sampling program, and the conclusion they told the market, and they talked about doing good signs, is that we need to do 10,000 plus ton bulk samples. And the work they did was they took samples from these conglomerate units at Comet Well, the upper Cannonball conglomerate and the lower Cannonball conglomerate, and they did it so that they had samples that were below the gold-bearing horizon and above the gold-bearing horizon. And the samples averaged out to somewhere in the 2 to 4 gram per ton range. Now, that's not really what the market wants to hear. We were hoping for 5 to 10 gram per ton type of average grades for the conglomerate unit that could be strip mined. Between 2 and 4 grams per ton, it is unlikely that these 12,000 square kilometers of Novo will end up being worth anything, because when you shift to underground mining, the cost is going to be too high. And also, in terms of the strip ratio, as you just strip mine this and chase the conglomerate unit down slope, at some point the strip's going to get way too high. And I've looked at crunched some of the numbers on the Share Collective and done an outcome visualization at 2.5 gram. And the stock, if this is what the future is all about, well, it's seriously overpriced. Now, the thing the market doesn't really like about this story is that the work that Novo has done has been to build a case to allow them to convert the exploration licenses at Comet Well into mining licenses, because those apparently are what is needed to do 10,000 ton bulk sample trial mining. Because the only way they're really going to get a handle on the grade is by processing these larger volumes of rocks in multiple locations and putting together a proper statistical model as to what the grade is going to be. I'm not sure how that will solve the problem of knowing where exactly the better grade material is. They have the tufaceous marker in the Comet Well part of the upper Cannonball conglomerate to help them sort of limit where they're going to dig up, what they're going to dig up as waste and what they're going to process for that. But the problem with Australia is you need evidence of mineralization to be granted a mining license, and this is kind of almost a legal problem. And the work that they have done is to build a case, in effect, to encourage the Australians to say, yes, this is a legitimate target that allows us to, that it's okay for us to grant you a mining license so that you can take it to this next level. And they would be wise to do this, because if what they have at Comet Well is worth mining, this exists over a vast region of the Pilbara. But all the other juniors, they've all been fading. The Australian companies have been trying to get rid of their claims to the Canadians as fast as possible. This has really helped Pacton Gold Inc. Pick up claims relatively cheaper. But the importance of the Egina acquisitions, that only came out in the news release that Novo published on the 17th, where on the 26th. And the important thing here is that they are shifting their strategy from trying to figure out the conglomerate, the gold in the conglomerate, which is hard as nails. I mean, this stuff is consolidated. The matrix in which the gold nuggets sit, it's almost as hard as the boulders, the ultramafic boulders and other rocks that make up the conglomerate. And until they do this larger scale trial mining and figure out whether or not the prize there is large enough to justify mining, the whole play would seemingly be dead. But in this area of Egina, there has been erosion of what I call the edge of the wedge, where the Fortescue Formation sits on top of the Pilbara and has been eroded. And over the last few million years, as the ocean rises and falls, there's been this erosion and then winnowing back and forth of the material. And once you get these the conglomerate breaking into pieces and start rolling it around the floor, the matrix starts to break faster than the boulders themselves, and so the gold ends up being liberated. And so we have these large areas extending from the where the conglomerate and Fortescue Monroe basalt package is still visible. Large areas, meter and a half thick, of very loosely consolidated gravels and cobbles that has undergone sorting in a marine environment. And the theory now is that this will be possible to find the gold nuggets a lot more effectively, because this will follow the traditional patterns of alluvial deposition of heavy minerals, of which gold is. And it's especially comparable to diamonds, because in South Africa you've had all these kimberlite pipes eroded, and in some cases the diamonds and the kimberlite end up in rivers and get transported by the Orange River all the way to the Atlantic Ocean and dumped onto the Skeleton Coast, where you have these marine terraces. This is not the same thing. This is more like the alluvial deposits associated with the Argyle mine in Australia, the Arapa in Botswana, and Venetia in South Africa, where you have a major body shedding itself, being eroded, and having its goodies, in this case diamonds, and in the case of the Pilbara, the gold nuggets, liberated into local deposits, not transported huge distances as has been done with the Namibian coast. And so you've had this local resorting. And the reason Novo was willing to pay so much money is they believe that this particular ground is very well suited to host these types of deposits. So in a sense, they're still stocking the Pilbara conglomerate gold, but they're stocking a recently liberated version of it, and they'll be using the usual sort of alluvial deposit measurement systems for which statistical models already exist, while they wait to get the approval from the government to start trial mining and try and sort out the golden conglomerate, which is something new. It doesn't really exist anywhere else in the world to have such large nuggets randomly distributed within a 2 to 5 meter thick horizon of conglomerates that are regionally extensive and with no fine gold in there whatsoever, just these larger nuggets. And I think that the theory that all of this came from microbial mats, which caused the gold to precipitate out of seawater and then form almost these flat gold-like sheets that eventually broke up and then got fairly rapidly rolled around and then transported into these conglomerate beds. That's why you have these fairly large melon-shaped, flattish type of nuggets. So the market's not happy that the big dream of the entire Pilbara being this giant gold trove, of which Novo is the larger story, that this is basically on ice for now. But with the shift to the Egina area and going after the liberated conglomerate gold within these marine terraces, that could end up producing near-term cash flow, which in turn could end up subsidizing what's turning out to be a much longer process of demonstrating that the Pilbara gold is going to eventually be a commercially mineable metal.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. We've been speaking with John Kaiser, his website, kaiserresearch.com.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.